What's up, guys? Dom Trimboli here from Refinancer. Now, today on the 6th of December, we've seen another rate increase from the RBA. To be honest, this one took me a little bit by surprise. I thought maybe they would give Australians an early Christmas present, maybe by just, leaving things for a bit and seeing how everything will work out. But, as they point out, inflation's too high, 6.9% over the year to October is, unacceptable. So yeah, here we have it. 25 basis points again with the cash rate sitting at 3.10%. Um, look, I think it's a bit knee jerk in my opinion. There's been consistent rate increases every month. It might be time to just let things sit, after a while, inflation will go down. It's impossible when you move things every month to actually see the effects of it. It's you know, it's kind of like when they reduced interest rates, it went all the way down to 2.99. They gave it a month and like, oh no, it's not working. Let's go to 1.99. So I think it's probably happening a little bit too fast, but regardless, this is where we sit, and another 25 basis points for Aussie homeowners. The good news is, I suppose, next month we can expect a bit of a break. With January, it's almost impossible they'll move then. And today's video, I just wanted to go over, I guess, 3 quick slides, just explaining the effects of what's happened. And I think this is really important because some people might still be, I guess, avoiding or just, I guess, not coming to terms with these increases. And this video, I'm going to make it really short. It's just a bit of an eye opener as to, look, this is what's happening, this is what you can do, and this is what you can expect. So let's get into it. So how do your repayments look now after the rate increase? So you wouldn't be paying this rate at the moment because, remember, this does take a fair while to kick in. It's very likely that all lenders will increase interest rates by 0.25%. It's consistently happened over the last year. It will happen. It's almost a certainty. So the new best rate is going to be about 4.74% after everything's factored in. Your rate's probably going to be about 5.2% if you do nothing. Of course, you get a bit of a discount when you're on the best deal. So if you have a loan of 250,000, you're going to expect repayments of about 1,300 per month. And this is $405 per month more than the absolute best repayments when rates were just under 2%. So such a small loan of 250,000, that's another $100 a week you're paying. And it just doubles. So if your loan amount was 500,000, your repayments are going to be about 2,600. And that's $800 more than the best a couple, 2 years back now. 750,000, we're looking at almost 4,000 per month, almost $1,000 a week. And this is $1,200 more per month. And of course, if you're someone with a large loan of $1 million, that is $5,200 a month in repayments. And yeah, it's about $400 a week in additional repayments. So this is a major difference. And of course, with increases of around 3%, this is kind of how it looks like. So yeah, that's important. This is best case scenario here. And this is kind of the difference in what would have happened. So is a refinance still worth it now? And that's probably something you're going to be thinking about, because, rates are going up. Does it still make sense to refinance? And of course, I'm in a bit of a biased position, but it almost always makes sense to refinance if you're not on the best deal. And we're going to look at the benefits of a refinance from a cost perspective over 2 years. So this is you now, who's on, a pretty average deal, and you're going to do nothing for 2 years. You're just simply going to let your, home loan sit there, and you're not going to create any action. You've decided that, it's too much hassle, it's too much work, you're loyal to someone, or, there's some other excuse like I'm busy with work, right? After 2 years, you're going to pay around $53,000 of interest with these new repayments. That's massive. Now, the alternative here is if you did refinance. So if you decided, look, I want to get to the best deal in the market, which at the moment you get a rate of 4.74%, and this is after the rate increases, you'll get 5,000 cash back as an incentive. And whenever you refinance, it's going to cost you about $700 in discharging and, switching fees. So you can already see here the total interest is much lower. And when we factor in that $5,000 cash back, your total cost is $43,000. So it's nearly $10,000 you would save in 2 years just by refinancing. So, is a refinance still worth it now? The answer is $10,000 over 2 years a lot of money to you? And if the answer is yes, then it absolutely is still worth it. And we're going to consider here, this is money you're paying, this is after you get taxed as well. So if you're a high income earner and you're getting taxed on 30, 40% of your income, you're getting taxed on that money and then you're paying all of this, right? So it's, if this money's on the table, you got to take it back, because the banks have enough money and you should be looking after yourself and your family to maximize every dollar. So, does it make sense? Yes, it does. Now, the next slide, 3 questions homeowners must ask themselves right now. And if you're going to get anything from this video, this is what I really encourage you to just kind of ask yourself. Such important questions. And if you're not thinking about this stuff, you could be doing damage to you in 12 months, you in 24 months. So the first question, our repayments have gone up significantly. Will this result in additional stress that may lead to the following? The potential of selling a home in a bad market. Interest rates are high now. Generally, you would want to sell your home when interest rates are low because there's more affordability for your buyer. If you're thinking that, I might have to sell my home and start renting, it's probably not in actual fact, it's not the best time to do that because your sale price for your home probably isn't going to be the greatest that it could be. If you can hold out another few years when rates are low, back to 2 or 3%, you're going to get so much more money for your home. That's proven over the last 5 years. The next thing, will additional stress cause missed repayments of your home loan? Because you know what that will do? It'll cause your credit score to go lower. And when your credit score goes lower, that means you're kind of stuck with your bank. If you're missing repayments, every bank can see that if they try and refinance you, and they're not going to want to take on your business, unfortunately. If they can see a few months of missed payments, they're probably going to find a way to not refinance you. And the other side of that is because your bank can see these missed payments, they consider you higher risk. So what they'll do is they will increase your interest rate on top of what's happening in the market. So if you're missing repayments, the bank's internal teams might say, look, this person's of a higher risk. Let's chuck another 20 basis points or 25 basis points at them. And the benefit for the bank is because it's double jeopardy. You're missing repayments, so they're increasing your interest rate, but because you're missing repayments, you have no options. And the bank, they may know that you have no other options, so they can kind of get away with increasing your interest rates. This is just how banks work. And yes, it might be a little bit untoward, but if we take the emotion out of it, the banks are trying to make the most money from you. And if they know you're in a position where you can't move or you have no options, they will then try and make more money from you. So it's important to understand that. The third thing is living and family stress. This is probably the biggest one here. Interest rates are going up. Money is a massive factor in household stress, for kids, for couples, for individuals. Think about this, will this make things difficult? Because life's too short to really have, money problems that don't need to be there. Like, some people might be in a position where it's unavoidable, absolutely. But if you can make moves to avoid this, absolutely do it. It's going to be such a massive difference. And look, I've been saying this in every video and I will keep saying it just because it's such a massive, massive point right now. But the solution here is to refinance and cash out. If you can take out 20 or 30 grand from your mortgage just to have there and, protect yourself against this for the next 2 years. And, if you think 20 or 30 grand is a lot of money, well, going back to our example, just by refinancing, you save 10 grand. So you've saved yourself 10 grand. You can just access this money as well. So you're in a net equal position by doing this. So again, speak to us if you want to look at a strategy like this. And the stigma of increasing my loan might not be the best, but the reality of selling your home, being stuck with a bad bank, or having family problems, trust me, is much, much worse. The next question you should be asking, I'm thinking about buying my first home or an investment. How has this changed my borrowing capacity? You need to live on today's numbers, big time. if you got checked a year ago, 6 months ago, and you're on a plan, a lot of clients have, they speak to someone and the professional or the broker might say, look, save up for a year, then come back to me. This is how much you can borrow. Man, that has changed big time. So speak to a broker like ourselves or a bank or anything like that. Understand where your borrowing capacity is at now. And the reality is it's going to continue to probably change as rates go up as well. So if a broker right now, let's say someone told you, hey, you can borrow about 600,000 a year ago. Well, that's probably about 450,000 now. And that 450,000 may actually get to about 400,000. So absolutely worth speaking and getting yourself another health check. And the next thing, of course, is could we be on a better deal? And are we sick of feeling helpless with our mortgage? It's a pretty simple one. What do mortgage brokers do? They manage your mortgage. People like me and my team, we are incentivized to always have you on the best deal. The way we get paid is by you staying in the loans that we provide you. And guess what? If we are not providing you a good loan, you will look elsewhere. And if you look elsewhere, we don't get paid. So brokers and consumers, they have a mutual interest in the consumer saving the most money. The party here that doesn't win, or let me put this differently, the party that wins less is the banks. So, I know some people might have a perception of, everyone in the finance industry is out for themselves, or I had one bad experience with a broker or a bank, I'm not going to trust anyone. Man, you gotta reevaluate that because it's costing you money. 70% of Australians use brokers. Have a look at the success rate and the complaints rate of brokers. It's barely anything. It is ridiculously low. The vast majority of people have excellent experiences with brokers. We're lucky enough to have so many great clients that have left us 5-star reviews. So, all these perceptions you may have, the new perception is brokers are different to banks. Brokers are actually on my side. They have an interest in us both, in really they will make money if I save the most money or I get the best deal. So, I encourage that mindset, as of course I would being in the industry, but these are three things that really could help you and your family save the most money. So that's it, guys. I hope that was pretty helpful. A lot of these points I've been driving home throughout the last videos, but I know if I was a consumer and who didn't know much about home loans, because why would I? I'm busy. I've got a family. I've got a job. I'm not an expert in this. This is what I would want someone just ramming down my throat because, me being in this position, I can see the before and after effects of this kind of stuff in fruition. So like the video, leave a comment, subscribe. Feel free to get in contact with us. There's a link in the video to apply with us. We've got 10 fantastic brokers. These guys are honestly, they will go above and beyond for you. They'll also give as much advice as possible. I've had so many clients come to me with questions that even they think aren't appropriate well, not appropriate, but they wouldn't think that one of us could answer. And we get to the bottom of it, or we'll let you know who can. So a major benefit of just working with us and our team is, you can pretty much throw any question at us and we'll make sure you get a solution. All the best, guys. Have a great Christmas and let's do the best we can with our mortgages because there's so much money to be saved. Thanks. Bye.